Thank you for your interest in the GoZone Trading Blueprint. The GoZone Trading Blueprint is a solid, consistent trading plan that works in any market and in any time frame. Today we will go over the guidelines that will help you use this trading plan effectively. Now these are guidelines, not rules. Rules imply some type of system where everyone enters and exits at the same place. We know that there are many different types of traders, so not everyone trades the same. If you are new to trading or a seasoned vet, you'll find trading is usually packed with many difficult decisions, which can create a lot of anxiety, pressure, and fear. It's almost impossible to make good decisions while under this type of stress. Our goal with the blueprint is to eliminate emotions and stress from your trading by providing you with effective, easy-to-use tools along with a consistent trading plan. So it doesn't matter if you're conservative or a very aggressive trader, the blueprint will work for you. In this video, we will be going over all the components that make up the GoZone Trading Blueprint, including our very effective risk management strategy, along with why it's important to know your market. This video is packed full of great information and well worth your time if you're considering joining the GoZone group to get a clearer understanding of how the blueprint works so well. If you're already a member, this is a great review video. As an educational company, we're required to inform our students that this information is for educational purposes. So please take a moment, pause this video, and view our disclosure. The four components that make up the GoZone Trading Blueprint are the GoZone Indicator, the lock levels, the LTTD, and our very effective risk management strategy. We will go over each and every one of these in more detail and then show you how to apply them. The GoZone Indicator is a very powerful, easy-to-use tool that assists you in identifying high probability entries in any market and in any time frame. Once in a trade, it's instrumental in helping you properly manage your trade, maximizing the points you capture. You can identify the GoZone by the color shading that forms around the candles. Pale green is for a long position. Red shading is for a short position. If red and green are not your colors, this is not an issue. All the indicator colors are completely customizable, so simply change the colors to whatever appeals to you. The lock level is an acronym. It stands for low, open, close, high. Simply put, they are the open, close, high, and low of the daily, weekly, and monthly candles, which are key levels when trading. And as you'll see, they're very helpful in managing your trade. These levels may differ somewhat from broker to broker depending on the data feed. These levels will become an important part of your trading. You now know what the lock levels are, and you can look this information up and put them on your charts today. However, adding 12 level lines to every chart manually is time consuming and very easy to make mistakes. Our lock level indicator does this automatically each day without making mistakes, allowing you more time to focus on your trading. You can change the color and style of the lock level lines. However, if you do change them, keep them uniform. By that, I mean keep all the open lines one color and one style, all the closed lines a different color and a different style, etc. This will allow you to learn what line you're looking at very quickly and will become a seamless part of your trading. The LTTD stands for Long-Term Trend Detector. This indicator turns the background of your charts a pale green in an overall upward trend, as you see here, and a pale pink if the overall trend is going down. Once again, all the colors are customizable. This indicator helps you in a slow market where the overall trend is harder to detect. We will be looking at a good example of this a little later in this video. Risk management is one of the components that has the least amount of sizzle or pizzazz. There are no bright colors, there are no hard lines to show you what to do, therefore most traders do not think too much about this part of their trading. They risk too much, causing them to trade scared. The first rule to risk management is never risk more than 1 to 2% of your trading account on any given trade. This is common knowledge in the industry, but many people ignore it. The second part is how you risk that 1 to 2%. Most people view trading as an all or nothing proposition. If you're of this mindset, by the end of this video, that will change, and so will your success rate and your stress levels. I cannot emphasize how important this step is to your trading success. Take 50% profit as soon as the market moves equal to your stop or the first resistance greater than your stop. Then move your stop to where you entered the market. Now, what exactly does that mean? Let's have a look. Okay, in this example, we have the Japanese market on a 5-minute time frame. I've done my paper trading and I've done my calculations on my account size, so I am going to be using a 60-point stop, and I'll be trading this at $10 a point. Now, the Go Zones provide us with an excellent signal to get into the market right here. We enter on confirmation. The market goes up very quickly to cover our 60 points, but there is absolutely no sign of any type of resistance, so we stay in the market until it comes up to this candle, and we have resistance here at about 130 points. So we sell half of our position here. Then we move our stop up to where we enter the market. Now, what we've actually done here is we've banked approximately $650, and we moved our stop up, so now we're in a risk-free trade. We still have $5 a point on, and now we just follow the rest of the guidelines to the Go Zone Trading Blueprint with absolutely no stress or no fear of losing money. There's absolutely no way we can lose money on this trade. Getting risk-free in a trade as quickly as you possibly can where it makes sense is absolutely the way to trade. Again, it relieves all stress, all anxiety. It allows you to think clearly to manage the rest of your trade properly and stick to your trading plan. The third part of the strategy, you take 25% profit as soon as you come out of the Go Zone. Taking the last 25% when the overall trend changes against you or there's an obvious exit. I know that seems a little ambiguous, and it actually is meant to be. Every market and every time frame trades a little differently. The most important part of this strategy is getting you risk-free in your trade as quickly as possible as soon as it makes sense. You can fine-tune your exits in alignment with your risk tolerance level. This is the advantage to knowing your market. For instance, on this market, the Go Zone gives us a very clear indication to enter the market here. Now, the guidelines state as first sign of resistance, you need to sell off half your position and move your stop up to where you entered. However, if you knew this market and knew that the reason this was changing was because the first half hour, this spread was 15, and now it's getting ready to change to 7, you would realize that people are getting out here to secure their profit. Knowing that this is where the spread change is going to happen, it may influence your decision-making process as far as whether you want to sell off half your position here or wait another candle to see if it continues on the upward trend that it is currently on, and choose a little higher spot to get out of. Here, you would have been able to get out at 220 points instead of 130 points from the first point of resistance. Since this has run up 300 points and it hasn't broke through, it comes out of the Go Zone here, then I simply would now put a breakout line to the top of that Go Zone, and I would not enter in any of these long signals until it broke through that breakout line. So if you're trading the cash market, this would have been the first candle you looked at. The second candle did not, I repeat, did not break through, confirm the trade direction by breaking through that candle, so you wouldn't have been in this trade. Okay? And because of this big run up, you would have had your breakout line here, so you wouldn't have taken these either. So this is why this strategy works well. And this is why you should know your market. The better you know your market, the easier it is for you to make these trades. Okay, we're now going to watch a recording of the rest of this day of trading, so that you can see exactly how the Go Zone Trading Blueprint works with all 4 components working together. And you'll find that this is an excellent way to trade because every component complements each other. So here we're back at the Japanese market, and we're going to let this play out here. Okay, this is the start of a go zone to go short. It's not a valid signal. Number one, the candle needs to close out and maintain that red box around it for it to be a start of a short signal for the go zone. The fact that the background is still green means the long-term trend detector saying the overall trend is still going up. So there's a conflict there. So this would not be a valid signal to jump in quite yet. Let's see how the rest of this plays out. As you see that the candle pulled back so much, it took it out of the short go zone. Now the candle's closed, so it's like that go zone never happened. So this is why you need to be careful when you're an aggressive trader, not jumping in too soon. Now you can see here where this market is trying to go through that daily close, and it just can't make it. You can see it's been bouncing off of that for the last hour. So that's a natural resistance point, and it's something that you didn't have to look up. It would have been put on your chart automatically. The hardest part about trading is waiting for your signals. Be ready to get in when you're supposed to get in, and don't do it until. So many people try to anticipate what the market is going to do, and that's virtually impossible. The best you can hope for is catch the trends early. You can't guess when the trend is going to start. You can catch it very early, but again, that's the best you can hope for. So be patient, wait for the signals, and when the signals occur, don't hesitate. Pull the trigger, jump in, and capitalize on the opportunity that's in front of you. Stick to your trading plan. This is sped up in the interest of time, but if you're watching this on a 5-minute time frame, the last hour would have been extremely boring. This is why we can set alerts to let you know when the go zone is starting. For more information about how to set alerts, go to our website and go to our Trading Academy and look up the video on alerts. Now we have a go zone to go short again, and you see the LTTD flashing back and forth between red and green. So it's right at the cusp of changing. However, the market has not made up its mind yet exactly which direction. So let's see how this plays out. Okay, now we have a signal to go short on the go zone. A valid entry point would be if this current candle, trades down below the setup candle, which is this candle here. If it trades below that, then that's where you want to enter the market to go short. Okay, you would enter the market there. Now we have a 60-point stop on this, so we're looking for a 60-point move in our direction so that we can exit half of our position, move our stop back to our entry, and be in another risk-free trade. That's the goal, is get to risk-free as soon as it makes sense. We're in good shape. We're inside the go zone. The long-term trend detector is saying the overall trend is down. There's no level lines in sight that would keep us from hitting that 60 points. So let's watch and see. We're now well past 60 points. But again, there's really no main resistance here, so no reason to do anything except watch the market. You've kind of gotten out anywhere down here, but as you got out when this candle turned green, you would have gotten out with about 120 points. That translates to 60 points, 60 full points, since you're getting out at 50% profit. You move your stop down from your 60-point stop down to where you entered the market. So you've basically made 1-to-1 on your risk at this point. Now you can sit back and follow the strategy, follow your trading plan without any stress. It really is this easy. And actually, you have more time than what we're seeing here because this is sped up. These are 5-minute candles. You have plenty of time to make a decision on how you want to manage this trade. But honestly, it is this easy to do. So let's see how the rest of this plays out. If you're in the all or nothing camp, right about now you'd be looking at this market in a panic, thinking that you've missed your opportunity to get out at the optimal spot and that you're losing money that you don't have yet, so you panic and you pull the plug to get out. Whereas the people in the 50% camp have already made 1-to-1 on their money, and they can sit through these pullbacks much easier, much calmer, because again, they're in no fear of losing money. Now they can just focus on sticking to the trading plan. If you have a plan that works, stick to it. Okay, again, sticking to the guidelines, you would have been out here and would have made approximately 100 points on at $2.50 a point. And you would still be in the game on this trade with the remaining $2.50 from the original trade going short. So since we're outside the go zone, conservative traders would put a breakout line bottom of this and not enter another short position until it breaks through that. Now, even though this is trading outside of the go zone, the overall trend, the LTTD, is saying that this is still in a downward trend. So that last 25% that you have on is still very safe. And now we're looking for a new entry point. Now, if the background turns green, then it's time to exit that last 25%. If it stays red, we just leave it alone and we enter on the next signal to go short. Now, if you're an aggressive trader, then you'll enter as soon as we get a new signal. If you're more conservative, again, you wait until it breaks through your breakout line at the bottom. Now, we've designed the Go Zone Trading Blueprint with all of these visual cues to make trading easier to follow. Again, this is a very simple way of trading and very effective way of trading. Here we have a new signal to go short. If you're an aggressive trader, you would be looking at getting in on confirmation, which means this next candle needs to trade below the setup candle, which is the first candle in this go zone. It has, so you would be in this trade at this point to go short. Again, that's if you're more aggressive. If you're more conservative, you would not be entering this market again to go short until it broke through the bottom of this go zone. Okay. Now you see that this is broken through the bottom of this go zone. So even as a conservative trader, you should be back in on this to go short. And again, you're looking for another 60 points at least. Take 50% profit and manage the trade just like you've done before. You're way past 60 points at this point, but there's no resistance, so there's no reason to do anything but watch the trade. And again, we're all in good shape here. The LTTD is red. We're still inside the go zone. The go zone is moving strong. We just blasted through the weekly low and yesterday's open. So everything is going excellent. So it's on a strong downward run. Nothing to do except watch the market. Here we're approaching the daytime low. And that's a good sign. If you're in a short position on the Japanese market, if it blasts through this daytime low, chances are it's going to go down much further. You can see this candle where you see some weakness now. There's more wick than body on the last two candles. Here's where I'd be taking 50% profit. I'd exit half of my trade here. So taking 50% profit, if you're conservative, you would have been taking 50% profit at about 350 points. Which is well over the 60 points. If you were more aggressive, you would have been taking about 445 points. So obviously, in this case, being more aggressive would have paid off a little better. So at this point in our trading day, we now have two live trades still on. One at 25%. From our original trade going short, and now the second trade at 50%. They're both risk-free, so you have no chance of losing money on either one of these trades. And we've already banked nice money on both of them. So your main focus should be sticking to the trading plan, sticking to the guidelines. Again, you should be trading not at this point stress-free. There's absolutely no way you can lose. This is a much better place to be trading from. You're not under stress. You can make good, solid decisions on what you see in front of you. As you can see, this looks very easy to follow. The reason this is all possible is the Go Zone does such a good job finding the trend so early on, which means that you're able to enter the market sooner and then using the strategy to get you risk-free as quickly as it makes sense. Again, it's a 1-2 punch that just can't be beat. Trading from a position of risk-free makes a world of difference in your mindset as you're trading. You're no longer trading scared. There's no fear, there's no anxiety, there's no stress. All you're focused on is executing the trade, managing the trade to the best of your ability. When you remove all the emotions from your trading, you'll find that it's much easier to trade, much easier to stick to a trading plan, much easier to make money. The longer you use the Go Zone Trading Blueprint, the better you'll get at it. Like anything, practice makes perfect. The longer you use it, you'll fine-tune your exit points, and you'll see you'll be capturing a lot more points than when you first started with it. Okay, this is a candle where the cash market actually closes. The spread will stay the same. I would be in this trade as long as it was moving in my direction. The first sign of it going against me, I would be getting out of all my trades. If you trade pre-market on this day and you're still trading at this point, that's about 8 hours of trading. That's too much for anyone. When you overtrade, your mind gets tired, and this is when you start making big mistakes. Now, you see now we're just bouncing off the weekly low. At this point, I would be looking to get out. If it doesn't clear this weekly low, This is about the time I would be getting out of this market. It's broken through. If it starts to do a pullback, get out on that very next candle. Because we're outside of the trading hours now, and again, anything can happen. Yeah, here we go. All right, I'd be out right at the weekly low. This is why you need to know your market. Know when the spread changes, know when the market opens and closes, and it will help you tremendously on managing your trade. So let's review the 3 trades that we've had today. Now, in saying this, again, this is not meant to show exact numbers. This is a ballpark. We're not counting the spreads. We're not counting the slippage. There's many things that could adjust these numbers, but you'll get the idea of how powerful this GoZone trading plan can be. So to review the risk management strategy, we've taken my $30,000 account, multiplied it times 2%, which gave me $600. $600 is the most I could risk on any given trade. Now on this trade, from doing my research and paper trading, I knew that 60-point stop would work well for me with my risk tolerance level, which meant that I can trade this market at $10 a point. So our pre-market trade, if you recall, we got in and took 50% profit at 130 points. Then got out at 250 points on the second part of the trade. And at the last part of the trade, again, another 250 points for a total of $1,900. And remember, we were in this trade risk-free within the first 30 minutes of trading. On our second trade, we got out at 50% profit at 120 points. Came out of the GoZone, we picked up another 100 points. And that last 0.25% that we stayed in until we got out at the end of the day netted us $2,750. What a sweet trade. And again, all this was risk-free within 40 minutes of us entering the market. The last trade of the day, we took profit at 50% at 350 points. Then we exited the trade after the cash market ended at 900 points. All told today, or on this day, if you would have taken just those 3 trades, you would have made approximately $11,750. That's with no losses. In every one of those trades, you would have been risk-free within a half hour to 45 minutes. Now, I will admit this was an exceptional day of trading. I don't want to come across like every trading day is this easy, but this was exceptional, and I do see many of these days on this market. That being said, losing trades are part of trading. The GoZone Trading Blueprint will not eliminate losing trades. It will help reduce them, but will not eliminate losing trades. The key is to keep your losing trades small and your winning trades large. At the end of the day, you'll have a profitable day. I know there's skeptics out there, and I don't expect you to take my word for this. However, we are offering you a free demo. If you would like to see how well the GoZone will work for you, contact us and we will look at any chart you would like, any time frame, any instrument. Just let us know and we'll show you exactly how well the GoZone works in any market or any time frame. Most companies will not make you this offer because they're afraid of how their product will perform. We're not afraid. We love showing off our product because it works so well. So please contact us today at GoZoneTrading.com and send us a message. We're happy to give you a free demo. I'd like to thank you for your time and good luck trading.